following is a paid program. Talk 103.7 WTIP and Cable Channel 7 welcome you into Financially Speaking with Jim Taunton. Find us live on radio, TV, the IPX Media app, and on YouTube. Just search Financially Speaking NC or get the link at WTIPFM.com. The opinions expressed in this show are for general informational purposes only and not intended to provide specific advice or recommendations for any individual. To determine what investments may be appropriate for you, consult with your attorney, accountant, financial, or tax advisor prior to investing. Securities and investment advisory services are offered through Genoa Wealth Management Incorporated, member FINRA SIPC. Now, here's your host for Financially Speaking, certified financial advisor, Jim Taunton.
Jim Taunton here, your host for the next 30 minutes, along with Jameson Taunton, the co-host. And the fourth program now, so he's getting broken. He's still a rookie. Getting broken in. How's everything on Oakmont Drive, Jameson?
About the same as when you left. Maybe a little colder.
Which wasn't too long ago, actually. I leave earlier than he does. We've got some good information for you. But as always, we'd much rather have a phone call from you. Call us with a question about something that's pertinent and important to you personally. That's a much better way of doing the show. So call us during this 2-minute break we're going to take in a second, and we'll take your call first when we come back. And keep in mind that anyone that calls in with a question goes into the drawing for the dinner for two at Antavola. I'll even pay the tip. Great place to eat. And we'll do that drawing on the air, actually. So call us. Let me give you the phone number. It's 252-561-TALK, 561-8255, 561-8255. And you can call us during this break, and we'll take your call first when we come back. Otherwise, we'll start monologuing with information and much rather talk to you. 561-8255. We'll be back with you in a couple minutes.
Country Club invites you to become a member. Come tour our beautiful clubhouse, ballroom, and facilities. For a quality golf experience, sign up for our discounted special membership rates, low monthly dues with no quarterly food minimum or assessments. Folks love to play golf at Ayton Golf and Country Club. Cool off at the pool all summer. Enjoy excellent food and beverages from the snack bar. Even store your own cart, unless you like to walk. Call 746-3389 for special limited membership rates at the Ayton Golf and Country Club.
My practice has been built on accessibility, responsiveness, and a willingness to be proactive for my clients. I'm not afraid to make recommendations relating to your investments and planning. I do hope all of your financial decisions are good ones, but let's not rely on hope. Let's roll up our sleeves and get to work.
Jim has attained 3 professional designations: Certified Financial Planner, Chartered Life Underwriter, and Chartered Financial Consultant, which entails 20 courses of study with examinations and a comprehensive national board exam, administered by the Certified Financial Planning Board. Jim has been practicing in financial services since 1979, which includes investing, planning, and insurance to help you meet your financial goals. Among the many awards Jim has received in his career is his selection to the Guide of the Top Financial Planners by the Consumer Research Council of America. So if you want to work with someone who is working for you, call Jim at 756-4700 or email him at planning@financiallyspeaking.com. That's 756-4700 and planning@financiallyspeaking.com.
Producer did not send me a text. That means we don't have a caller. That's a sad state of affairs. Again, the number is 561-TALK, 561-8255. Call us with a question, financially related question, and your name goes into the drawing for the dinner for two at Antavola. I even pay the tip. And until then, we have some information for you. Jameson did a little put together on the 1040 tax return. beginning of the year, you probably need to start thinking about taxes. And of course, some people haven't even completed their tax return, which is me. I'll raise my hand for that. I'm gathering data. Jameson, what did you uncover?
Yeah, taxes not always the favorite topic of people, but it's interesting just to
Yeah,
kind of
taxes
play
in
that
general.
into the investment world around this time of the year. And there's a really good sheet that we always get from, I believe it's Jackson National. It's a really good piece to use, but it's an overlay that you put on your 1040, and it highlights the lines that either are important in investing or that a lot of investors will see. So thought it might be a good idea just to go through those lines really fast and kind of talk about what they mean and kind of what to expect. But 1040 is kind of that main form that you file for your taxes, and there's some things that are usually come up for investors. Lines 2A and B talking about interest. Reported on your 1099 INT, usually from banks, investment companies, government agencies, different things. So the interest is taxable unless it's interest on a municipal bond, treasury bond, bill or note, or funds that may hold these things. Um, Next line is usually one that pops up for a lot, line 3A, 3B, which are qualified and ordinary dividends. We usually have a lot of questions about what's the difference between those. But dividends are usually issued by companies. They issue dividends from their profits or investment companies where shares of companies are held. So companies do well, they share those profits with their shareholders in the form of dividends. And so make money and we pay tax on that. Ordinary dividends are taxed at normal income rates. So whatever bracket you fall into, that's how those are taxed. Whereas qualified dividends are taxed at the capital gains rate, which is usually around the 15%. And they are paid stocks that are held more than 60 days. So hold on to investments long term. Ordinary dividends, you pay a lot lower tax rate on that. Line 4A and 4B, dealing with IRA distributions, which are very common. We handle a lot of rollovers. Most of the time, we're generating income from those rollovers. So we have clients that are receiving those 1099Rs, which just show, the amount that is coming out from that, how much of that is taxable. All withdrawals from traditional IRAs are taxable because the money that you put in is pre-tax. So once you take it out, you have to pay tax on that, whether it be paying tax right when you take it out or just paying tax at the end of the year when you file. Those distributions can be looked at as normal distributions, which, after age 59 and a half, if you take it before then, they're considered early, which carry a penalty. So there's a few different numbers on there. We are by no means tax professionals, but we try to help clients as much as possible when dealing with that. But, when it comes down to the nitty gritty and really diving into it, we always recommend to go to a tax professional. Next line's a couple more that, usually pop up for a lot of clients and investors. 5A and 5B, which refer to pension and annuity withdrawals. Those kind of fall into the same line as the IRA distributions. They can be reported on that same form, the 1099R, just comes from a different source. So, and then probably the most important and most common that we see, line 7A, which refers to capital gains and losses. You'll probably see that number if you receive a 1099 DIV. I know Pershing, who is the clearing firm for our broker dealer, they send out a form and you see the 1099 INT and the 1099 DIV all on the same form. But the capital gain, that form shows a gain or a loss from the sale of an investment holding, including stocks, mutual funds, investment real estate. So pretty much anything that you buy and sell, whether you make money or lose money, is going to be reported there. Um, you have short-term capital gains and losses, which are on investments that are held less than a year, and they are taxed at a little bit higher capital gains rate versus the long-term investments that you hold longer than a year are going to be taxed at that lower, around 15% capital gains rate. So, holding those investments longer is going to pay off in the long run. The most common capital,
if you've held an investment, let's say 9 or 10 months, you've made some pretty good money on it, and you'd like to sell it and reap the reward, but you can hold it another 3 months and get it past the 1-year period. You probably should do that if you possibly can. Now, if you have information to that investment's going to go down in the next 3 months, then you may lose what you would save, in the differential between capital gains rate and ordinary income rate. But don't you think that if possible, they should hold it until they had it a year?
I think so. That's always a conversation to have with your financial advisor and or your tax professional. We always get information release forms signed just so we can have a conversation with everybody. But the difference in the tax rate that you're going to pay on a short-term versus a long-term, depending on what tax bracket you're in, it could be the difference in 15% and, 22, 25, and even more. So it's definitely something to think about and a conversation to have.
Sure.
So very important.
All right. Very good information. And again, as Jameson said, we're not tax advisors, but we do have a working knowledge of taxes. We have to, in our business. But if you would like to sit down and talk with someone, not about taxes necessarily, but in general, your investment strategy and financial planning and other things related to you financial, we'd like to give you some contact information. And the email is jameson@financiallyspeaking.com. That's Jameson with an E, so JAMESON @financiallyspeaking.com. Or you can call us at the office. The number is 252-756-4700, 756-4700. And the first consultation is no cost or obligation.
Yeah, one more quick thing. Probably the most important perspective that we have on this topic when it comes to taxes and investing, we're able to take take a different look at things versus a client, take some of the emotion out. But one of the things that we tell clients when having the conversation about taxes and investing is that investment income is good. If you have to pay tax when you sell something, that means you made money. So that's nothing to be afraid of. But tax implications should never be the main driver of investment decisions. You always invest with a long-term strategy. You may think about taxes, come up in conversation, but it shouldn't be the reason you do or don't do something.
There are two statements that I've made over the years to clients. Number one, don't let the tax tail wag the decision dog. You don't make money decisions solely based on tax consequences. And secondly, paying tax on gains is a whole lot more fun than writing off losses. So, and another thing I tell clients is that if they start taxes, I'll tell them that I can solve their tax problem. Quit making money. And they won't pay any taxes, but they kind of wrinkle their nose at that. All right, let's move on. Over the years, I've told listeners that a lot of the fodder for what I talk about on this program comes from real life cases, clients I've met with during the week or previous week. And of course, we don't use names to protect the innocent. But we've got a case working on right now. You've done most of the legwork on it, but it's a financial plan we're doing for an individual that actually called us It was a referral from someone that knew us, which is probably 99.99% of all the business I've ever done in my career. But he needed a financial plan to find out where he is, where he's going, how he's going to get there, and see what was feasible as far as age of retirement, what have you. And James, I'd like for you to just talk a little bit about the process of financial planning, the kind of information that people need to be ready to provide to us, and understanding that we have absolute confidentiality with clients. All the information stays right here. So we need information, and just tell them what kind of information we're needing, and then we'll talk about the actual process of plugging in data, looking at it, tweaking it, and logistics of getting back with a client and running over reports. So just start out. I'll interrupt you.
Yeah, so whenever we meet with prospective clients, it's a conversation. It's a little dance. You know, we come in a little bit, they come in a little bit. So one of the first things that we try to determine is, number one, if we fit together. If they're comfortable with us, we're comfortable with them. If we feel like we can help them, but we try to narrow it down between: are they looking for help with something specific? Do we put the blinders on and look at just retirement? Look at just life insurance? Look at just maybe help with budgeting and something as simple as that? So is there just one specific avenue that we need to go down? Or do we look at their overall financial picture, which in this case, that's what we're doing. We are creating a financial plan which looks at every aspect financially that they are involved with, that we can help with, give investment advice on, whatever the case may be. So when putting together that financial plan, there's a lot of information that's gathered and plugged into the system that we have, which allows us to generate reports and make decisions and recommendations based on that. But really the four things that we always ask clients to provide information on, number one is cash flow. We want to look at money coming in, whether it be from income sources while they're working, Social Security, maybe if they've retired, different sources of money coming in versus money that's going out. All the bills that they're having to pay each month, loans, daily living activity. I mean, whatever the case may be, money coming in versus money going out. That's the first thing. Second thing, assets and liabilities. So we want to get an idea of everything they own: house, cars, jewelry, furniture, bank accounts, investment accounts, whatever it may be. We want to get an idea of everything they own versus everything they owe. So loans that they have on those assets, anything like that. So money coming in, money going out, everything they own versus everything they owe. We need to get a hold of. The third thing is account statements. The most common one that we get is from workplace retirement plans. We kind of want to have an idea of what they've been able to put away, what they're currently invested in, what their goals are for that. So one of the main things. But, statements from current investment accounts they may have elsewhere for after-tax investing. We want statements from life insurance policies. So whatever is pertinent to their financial conversation, we want to get statements on that. And the fourth thing, which is probably the hardest thing for people to kind of wrap their head around, their goals. Their goals moving forward with us, their goals for retirement, whether they want to retire at a specific age if they can, goals as far as something they've always dreamed of, like buying a beach house, traveling all over the world, buying season tickets to their favorite sports team. So what goals do they have from this point moving forward? So what we do is we take all the information that they provide, we plug it into our system, We are able to generate reports that give us an idea on how their cash flow looks, their overall net worth, which looks at the value of everything they have versus what they owe. We're able to look at how their retirement outcome appears right now, which is what we get from all their statements. And we're able to determine whether we can get them on the path to reach all, some, or none of the goals that they have. Unfortunately, we have to have hard conversations at times, but we do have a lot of situations where we're able to tell clients, hey, your situation looks great. These are the tweaks that we need to make. This is what we recommend. So we're able to put all this, run the reports, have a conversation with the client. There's always multiple meetings where we have to kind of fill in the holes of things that we realize, oh, we don't have information on this, or, oh, that doesn't look right. Let's make an adjustment to this. So we meet, discuss, edit
It definitely
multiple
is a
times.
process. It's a process. I tell clients it's like going to your doctor and telling him, I've got a pain in my abdomen and what I need to do. Well, if he immediately wrote your prescription, he's engaging in malpractice. He needs to look at your medical history, run some tests, create a diagnosis, a prognosis, and then maybe he can prescribe something that'll help you get better. And that's financial planning is very similar to that. We actually need to go to a quick break, another couple minutes, and that'll give callers time to call in. So give us a call with a fun question. We'd love to have you do that and go into the drawing for the dinner for two at Ontevola. Number is 561-TALK, 561-8255. We'll be back in 2 minutes.
Golf and Country Club invites you to become a member. Come tour our beautiful clubhouse, ballroom, and facilities. For a quality golf experience, sign up for our discounted special membership rates, low monthly dues with no quarterly food minimum or assessments. Folks love to play golf at Ayton Golf and Country Club. Cool off at the pool all summer. Enjoy excellent food and beverages from the snack bar. Even store your own cart, unless you like to walk. Call 746-3389 for special limited membership rates at the Ayton Golf and Country Club.
My practice has been built on accessibility, responsiveness, and a willingness to be proactive for my clients. I'm not afraid to make recommendations relating to your investments and planning. I do hope all of your financial decisions are good ones, but let's not rely on hope. Let's roll up our sleeves and get to work.
Jim has attained 3 professional designations: Certified Financial Planner, Chartered Life Underwriter, and Chartered Financial Consultant, which entails 20 courses of study with examinations and a comprehensive national board exam, administered by the Certified Financial Planning Board. Jim has been practicing in financial services since 1979, which includes investing, planning, and insurance to help you meet your financial goals. Among the many awards Jim has received in his career is his selection to the Guide of the Top Financial Planners by the Consumer Research Council of America. So if you want to work with someone who is working for you, call Jim at 756-4700 or email him at planning@financiallyspeaking.com. That's 756-4700 and planning@financiallyspeaking.com.
Guess everybody's busy tonight. They've been stove up in a house for so long. They've got cabin fever. They're out enjoying better weather, I guess. It's been a little rainy today, but still, it's not as bad as, a foot of snow. Did everybody see the snowflakes we got this morning? I mean, the snowflakes were actually bigger than the ones we received during the storm we just had, but it only lasted like 10 minutes. It didn't amount to anything. It was pretty. It's pretty. I told them at the office, it's my favorite part of snow is watching it come down. And then it needs to get out of here and go somewhere else. All right. I actually took a picture of the television. Seems like a strange thing to do. But I was sitting at my desk. I have a TV on the wall to the left, and I keep it on a financial network. and I just happened to see a chart that was up on the screen, and I said, man, I'd like to get that. So I took my phone out and immediately took a picture. Most time when I try to do that sort of thing, it goes away before I get my phone out and ready, but I did get this one. But this one was related to inflation. And the chart was showing inflation each month. And, of course, it had been for a trailing 12-month period from that month. But the CPI, ex food, energy, and shelter. And the reason they removed that for one of the particular readings of the CPI is because those are the most volatile parts of the index. And if you take them out, you get really a truer reading of core inflation in the economy. And starting back in March of last year, inflation started at 1.8, and I'm going to read the numbers. So each time I read a number, that's moving up a month. It is a 12-month trailing, but it's moving up a month for the last month. So starting in March, 1.8, 1.8, 1.9, 2.2, 2.6, 2.7, 2.6, 2.3, 2.2. So guess what's happening with inflation? It is coming down. December 2.2 was a trailing 12-month inflation rate. So, I believe that inflation is going to continue to dwindle. And one of the reasons is what a gentleman that I listen to a lot, he's been on the program several times, Louis Navellier, he talks about the United States importing deflation from China. China is experiencing severe deflation in a lot of areas, and it's going to continue, and they're probably going to have to devalue the yuan, I believe that's the name of their currency, to try to get a handle on that. But we are experiencing disinflation. So you've got inflation, prices going up, disinflation, prices are going up, but they're going up at a slower rate each month. Deflation, prices are going down. Now, every economist under the sun is trained to know and believe that we need to fight deflation. That is the worst thing that you can have in an economy. We actually want a little inflation. That means your economy is growing, very simply. So a little inflation is not a bad thing. 2 to 2.5, maybe slightly more. But we are in a disinflationary period, and it's going to continue to come down. That's a good thing. And GDP is going up. That's a good thing. It's not going up quite as much as we thought initially because they've changed their projection for inflation, they being the Atlanta Fed. One projection showed 5.4, and then it was reduced to 4.2, which is still good. I do believe we'll be over 5 GDP growth, Jameson, by the end of 2026, which means the economy is running on all cylinders, no doubt about that. But it's really perplexing. The stock market has been in the doldrums for a while now. It's like there's a ship on an ocean that has no wind. It's just kind of drifting, but it doesn't have a good direction. And we need something. We've had good earnings. I don't know what's keeping it down as it is right now, to be honest with you, but I believe what may cause a little gust of wind will be the earnings of NVIDIA at the end of February. I think you're going to see bang up numbers there. So let's hope.
I do.
All right. Appreciate you joining us tonight. You didn't know us next time.
Good night.